Mike Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS for a decade. I've been in private practice for 4 decades. Yes, I've been doing this for 50 years. Welcome to my YouTube channel. It's the home of the 5 minute or less video. I don't go in a lot of blah blah stuff. For this YouTube are to be educational and informative to give you the information and fact that you need to make good, solid decisions about who you want to hire or doing this at yourself. So just a note about me, I've worked about 10,000 cases. I'm a national expert in IRS resolution matters, and if anyone's telling you other than I am, they're probably lying to you or don't know what the hell they're doing. So anyway, with that said, by the way, the only marketing I do is we are available for representation and consultation. Today, what I want to talk to you about is the trust fund penalty, the 6672 penalty, and how you can defend yourself against this penalty. Many people are unaware that this penalty actually even exists. The 6672 penalty is a trust fund tax assessment against individuals who are responsible to go ahead and to pay the corporate debt. So let's go and look at the bigger picture. You have a business, you owe 941 taxes. Those 941 taxes may not be paid, or the government says, we better make sure we hold somebody responsible for the trust fund amount. What's the trust fund amount? The trust fund amount is that was supposed to be withheld and turned over to the government. In this case, the withholding, all the withholding, and one half of the Social Security, the money that was taken out for you to turn over, it's not the match portion, but the money you took out of their checks, that was never turned over. So the federal government, IRS, is going to go after the responsible persons who were really the ones that were supposed to go ahead and pay it to start with. They're usually people who signed checks and owned the business and made decisions like that. That's who IRS is going to go after. So even though the corporation will still owe the tax, the government will go after those responsible persons to go ahead and to collect the tax from. And IRS goes through a lot of due diligence to find out who that is. Basically, IRS will do an investigation into the bank signature cards, the review of the checks, who signed the checks, bank documents, loan documents, any corporate documents that they can get a hold on. They will summons the company for information as to were there any other loans or financial institutions they did business with, or third-party contracts. They want to know basically who signed them. So that's what IRS, as a revenue officer, I did this. That's what we are looking for, or that's what I was looking for. So how do you defend that? You defend that by a series of writing a thorough affidavit that you were not responsible because, and you want to list the reasons why you were not responsible. Sometimes somebody passed that authority, or a secretary, or this was a job given to you, but you didn't own the business, so you want to write your own defense. Now, writing a self-serving letter is not going to go ahead and help you. It is the basis to go ahead and to take care of the problem, to defend against the trust fund. You want to have emails, you want to have exhibits, you want to have letters from other people to show that your affidavits are true and correct. So basically, you want to write your affidavit letting them know why you are not a responsible person, exactly in the exact order and time sequence events of what happened. Then you want to get people or documents or emails to corroborate what you're saying. That is the only defense that you are going to have. The more people, the more third-party statements, I put them under penalties and perjury, the more information that you can show the Internal Revenue Service that you really did not control anything. At that point in time, IRS can release this from you. Now remember, just because the revenue officer sends you out the 2751 and the 1153 form saying you're responsible, if you've not convinced the revenue officer you're not, You can always go to the appeals division and convince them. You need really kind of sophisticated tax help like us or someone else, and you can always go to tax court. So try to convince the revenue officer. I would have a face-to-face meeting with the revenue officer. It's always best than over the phone, and let them know the reasons. At the end of the day, the IRS really looks to two things. That's what I did: control and who was signing checks, and what other employees said. So those are the three things that you have to guard against. If this was helpful information, give me a subscription. If you're on YouTube, you thrive on subscriptions. If you want me to do a YouTube on something related or something else, leave a comment. Most of my YouTubes come from comments that you all make. A subscription is helpful. Give me a like. If there's anything else you need me to do, call me. We are available for representation and defense of the trust fund tax.